Good morning, everybody, and a warm welcome to this next chapter in Level Up, our Your Customer Journey webinars series. My name is Jacob Fergerman, and I'm sitting here with Jennifer Rowe in our Copenhagen office, and it's a pleasure to have you with us this morning where we're going to discuss your customer relationships. With us to support us through the next hour, we have Bartek Staszewski, who's sitting live from Warsaw, who we will give the word during the presentation, and we will also be able to ask questions to Bartek when we get to the end of this session. Before we get started, there's a few housekeeping rules that is good to be aware of in terms of how to navigate on the platform. First and foremost, we encourage you to be interactive in the sense that if you have any questions or comments, please feel free to share these on the chat box, as you can see on the right side on the screen. And also, you can see on the right side in the middle of the screen, there's a zoom function in case you need to increase the screen size if the screen is not visible enough for you where you're sitting. All right, let's crack on and look at the agenda for the next 1 hour. After the introduction, I'll discuss a little bit why customer management is relevant in these times, particularly post and during COVID-19. And after I've done this introduction to customer management, Bartek will help us defining and identifying your customer, how that is done in real life scenarios with some good examples on what is working today, but also what are the trends we're seeing going forward. Jennifer Rowe, who's sitting next to me, will then go into more closely into how we define complex customers, because we all know that what is actually the definition of a customer. We have facility level, we have customer level, we have household level, and similar on the company level, there are different levels that we need to understand before we go into the definition of customers when defining strategies in terms of having the most optimal strategies in place. In the very end, I will facilitate some questions in case we also have some comments from you. We really encourage you all to be part of this session. So any feedback from you will be very much appreciated so we can take some questions in the end. Right, let's crack on with why customer management. Let's have a look at what it is we see as trends. Customer is, of course, the heart of everything we do. That is what we say in marketing material. That's what we see when we approach customers with commercials, etc. But what does that actually mean? We always want to provide quality to the customers. We want to perform 100% 24/7 and provide the best service. Because if we do this, we will have satisfied customers, and also it will give us credibility in the space that we are a reliable partner, and hence we can make sure that we don't have as high attrition as if we did not provide good enough customer service. This is easier said than done when we're working with customers in the day-to-day life, because we're moving over the last 50 years from a paper environment with banks, telcos, etc., to a digital environment where we need to use data points to perform the best customer service 24/7. Having said this, we have conducted a survey across EMEA with senior business leaders, and we do see that almost 70% of CXOs recognize that there's a digital gap in terms of being able to provide the service that we want to provide. Particularly if we look into the COVID-19 and the pressure towards increasing the digital footprint, both internally, but certainly also externally, is something that we see companies are very much aware of, and they are increasing budgets significantly in order to minimize this gap, to be able to do digital strategies and execution of customer services on a much more reliable platform moving forward. What we also see is that, of course, customer insight is the key business priority over the next 12 months. More than 3/4 of the senior leaders believe that should be the focal point of all business activities going forward. And it's quite interesting to see the significant gap we have where only 36% of the senior leaders can actually retrieve real-time customer data. So one thing is, what is our strategic ambition by digitizing customer strategies, but then also what are we actually able to do on a day-to-day basis. Also, only 40% have a single customer view. We do see that we have siloed data lakes where it's difficult to combine customer information into one holistic view of customers. So certainly there's a gap in terms of being able to manage customers in a digital space across the credit life cycle. And that is something I will come into in a few slides. But first and foremost, customer centricity. What is that? For us, there are 3 dimensions into it. We need to understand the customer life cycle. Where does it start? Where does it end? And what are the digital touchpoints in between? When reviewing the customer life cycle, we need to understand what is the customer experience. What is it our customers will expect from us, both from a marketing perspective, onboarding perspective, customer management perspective, but also if we go into a stressful scenario, what do we expect as a good customer experience? And of course, we need to make sure that we have the most value out of our customers during the lifetime. Having these 3 dimensions in place, we believe that we can achieve customer centricity in real life. But let's take a look at the customer life cycle, what that actually means. Because in our mind and our experience, when discussing customer management, this is about managing existing customers. But it all starts with marketing. We have seen a few examples where banks are trying to attract young individuals, millennials, in order to make sure that we have customer base that we can have for a long time. So all marketing activities are solely focused on young customers. The challenge is if the credit risk is not geared to that profiling. So we have seen cases where the marketing strategy is really not geared in terms of the risk profiling on the onboarding process, which then gives a mismatch when managing existing customers. So my key point I want to address here is that the different customer touchpoints that we see throughout the credit life cycle or the customer life cycle needs to be linked together, because there is a clear link between the different components. For instance, if we have limit management, they should of course be aligned to origination strategies to make sure we offer the right limit to the right customers with the profile that we expect to onboard. This sounds trivial, but we do see that some organizations struggle with a good balance between the different parts of the organization to ensure there's a complete alignment to what is the type of customers we want to have on board. And certainly also in terms of the debt management, we also want to make sure that we can collect money on those who unfortunately end up in a stressed scenario. Hence, we need to make sure we have the appropriate early warning signals, etc. But what does it tell us with data touchpoints? Customer touchpoints, as I mentioned before, relies on data. So that means that we need to capture data and move away from gut feeling. So if we get a stressful call from a customer in stressful situation, we need to understand what is the best action to do. Of course, this sounds easier said than done. But what I want to emphasize with this example, data can help us, particularly if we make sure that we collect and capture the correct data at different touch points. This is a completely different example, but I think it tells us a little bit of a lesson. Because what can we actually learn about investing from the business of French wine? When we drink wine, which we sometimes do, we often have a tendency to when we taste it, we look at the bottle, does it look fine? In which setting are we sitting? It's a very subjective opinion we have of the taste of the wine. But in fact, we have a professor who managed to use different data points to understand or estimate the quality of wine based on winter rainfall, average summer temperature, harvest rainfall, age of vintage. I think you understand where I'm getting at, is that if we make sure we get the right data touch points, then we can most likely be able to offer a better customer experience and the right actions towards customers at the different stages in the customer life cycle. And this is a very interesting example that Ole Aschenfelter made in the 1980s, which created quite an uproar that suddenly we could use an algorithm from the university, Princeton University, that could estimate the price of wine. And my encouragement today is we need to understand these data touch points from customers much better in order to have the most optimal customer touch points, not only during bad times, but certainly also good times and stressful times, as we've seen throughout COVID-19. And now we're going into post-COVID-19, and we need to make sure that we are ready for that scenario. I will now stop talking about wine, and I will give the word to Bartek, who is with us from Warsaw. Welcome, Bartek.
Thank you, Echo. Thank you for a great intro. This story about wine makes me thinking about customer management in a very, I would say, different way, because the professor was able to find out the solution how to estimate the best price. But does it mean that the same wine fits all? Does all customer want it? I don't think so. And also, I believe that many data dimensions can drive us into the higher level. But there was a historical trend from many years, maybe 1,000, maybe more, how they were doing this wine. So how can data help us? Data can help us maybe to say when to harvest, which seeds to use, and how to take care of it. But in fact, all the historical production shouldn't be changed. That's interesting. Let me share you a very brief story about the customer management. So when I was living in Germany for some time, and I wanted to open a bank account, I went to the bank and opened the account, and immediately I was sent to the fraud department. And I realized why many years ago when I was working for this bank. So they told me that there is an algorithm that whatever your surname ends on ski or SKI, you need to be sent to the fraud department, because the characteristic of this population shows that this is fraudulent population. Maybe I wasn't happy about that, but I understand why it happens, and I understand that it needs to be like that. However, my customer experience was a little bit touched because of this point. We can go to the next slide, actually. Thank you. And anyway, I was somehow approved, but then when I wanted a loan, it turned out that back in 2002, I missed my payment mortgage, and this was a disqualifying for the pre-approval, which was interesting. And another story from customer management. In 2020, maybe you remember, this was the old times when people could travel, people could meet other people not wearing a mask. And this was the interesting moments. I was in the Southern Europe working for one of our clients, and I was there for some time. I decided not to go back home for a weekend because it started to happen something we later recognized as a lockdown. And I called my bank and I asked them to increase my credit limit on my credit card by 500 euro. This is a bank that I have a relationship since 20 years. I have mortgage there, I have deposits there, I have everything there. And they refused me. I started to wonder why they refused me, and I asked them. And they told me, listen, you are sole trader and you are self-employed, and we have industry blocker since 1 week for you, and we cannot give you the increase of your limit. I said, this is ridiculous. I have deposit much bigger than what I want. And the only reason what I want is I want to pay in euro, and I want to be charged by the bank on the spread. And we are doing this since ages. So why will you will not give me that? And then they said, risk department told us that we cannot. give you that. And sorry, you need to take care of yourself somehow. So they left me, kind of. They left me outside of my home country, dealing with this situation. Of course, I handled it, and I was able to return home. I think 1 hour before the lockdown. So finally, I didn't have to go on the probation period. But was it the right or wrong customer management? And depends who you ask. Because if you ask risk manager, it was right. This population of sole traders bring a significant risk, and you should stop them from limiting risk. From my customer perspective, it was wrong because I was angry. I'm telling you this story now, and it means that, I remember that. Did I change the bank? No. Why? Maybe because I'm too lazy, maybe because it was too much to do. Did I wrote a complaint? Yes, I did. But what they could have done differently? Why am I saying this? I'm saying this because I believe that if you want to be excellent in customer management, you need to manage the lot of data in a real time. In a real time, it means that you need to be able to capture the data. You need to be able to recognize them. You need to have a data hierarchy. You need to understand which data are more important, which data are less important. You need to have it all, and you need to have infrastructure to be able to calculate it and to understand what comes and what insights comes from the data. This means that you have to create a strategy, and this strategy should lead you to the certain actions. Of course, customer management has many dimensions. It has something to do with origination, something to do with portfolio management, with collections, and with upsell. Believe it or not, but a lot of my clients is telling me, yeah, we are very happy about our customer care. We know what is 360 view. We are doing this. We are doing personalized marketing. We are doing personalized offer. In fact, what I observe is that my clients invest a lot in origination process, in customer onboarding, which is right because they are paid and they are measured by a growth rate, which I believe is not very good because not everyone can grow a double digit every year. But that's another story. Excuse me. And yeah, customer management in this respect leads you to put a promise of a service level after origination. If you put very, very high standards in the beginning, then customer expects that afterwards. Not every client is the same. We may say every client is unique like anyone else, which means that everyone wants to be treated differently, although people are very similar to each other. But what it really means, it means that you need to be able to recognize your clients' needs on an individual level, which is even harder when you think of the all possible dimension that my colleague Jennifer will tell you in a minute. You may have household, you may have individual, you may have married couple. They can be treated separately, they can be treated all together. How to deal with it? My example, I'm a sole trader, I'm a self-employed, cooperating with Experian. I'm acting like I was employee, but in fact, I'm not. This means that my bank has a problem with me because if they don't recognize me properly, they can lend me twice. They can give me financing as a private individual and as a sole trader in the same moment. And this is not an unrealistic case because sole traders or micro or Soho, you name it, they are treated like this in almost every organization I know. So this is no man's land. They belong to retail or they belong to corporate or SME or, again, you name it. And nobody knows how to deal with it. Even more, I can be a board member of some organization. And what then? Will I be treated as a SME or not? That's a lot of puzzles that you need to solve with your data management and with your customer care structure. And how the organizations are doing with it? Well, in a very different ways, sometimes by organizational structure. So I've seen customer relationship management, CRMs, reporting to business lines, like one for corporate, one for SME, and any other. Sometimes it was one organization handling all the data streams from the whole organization and dealing with CRM. Sometimes I've seen once CRM reporting to IT. I think this was the main reason was because the organization was making a huge investment into the modern CRM, and capturing the live data from the web and capturing insights to do the online sale. Very interesting project. And I also seen organization, very famous one, very well established and very respected in the market, where CRM was done in risk. And it was completely other way around. So they were not chasing for customers' goods to be sold, and they were not chasing for propensity score, but they were saying which customers are eligible and then focusing on those customers, which was very difficult because proximity to buy is, I would say, contrary proportional towards the risk that customer makes. So what I want to tell you here is to be successful, really successful in customer management, you need to distinguish the customers in different dimensions. You need to capture the data, unfortunately or fortunately, real time. You need to be able to characterize it, and you need to be able to set up a strategy, which is a very tricky part and which is a very difficult part, because to do it right, you need to, on the organizational level, decide how to do it. Do you want to become customer-centric, or you want to focus on your KPIs, on the sales volume, on a market share, on the return, on the risk ratio? All of that leads to a slightly different strategy. You need to be able to test and learn and deal with it. And if you ask me what is the best way to deal with it, I would say it's a test and learn. There is no one golden rule for the all industry or all the organization. Yes, of course, I can tell you what is the most successful in the market. I can tell you which variables for the models works the best in the industry. I can tell you what is the difference between telco and insurance company and banking. I can even tell you what is the difference between the, I would say, universal banking that covers whole country or whole market versus the specialized one. But it will never be a golden rule. If you want to do it right, you need to test and learn. You need to do R&D projects and test and learn. You need to take failures. Sometimes you need to get wrong. Sometimes you need to test something which completely doesn't make sense. Coming back to the wine example, well, if someone tells you now that you need to take all your wines north and try to plant it in Denmark, would it make sense? Probably not. That's why you have to test and learn. But if someone tells you perhaps we should try on the other side of the hill because there is a little bit less sun there, but the soil is much better and the wine may get a better taste and we may get a better price on it, I think it's worth testing. So this all comes with experience and this all comes with curiosity. Can we go to the next slide, please? Yes, that's my favorite one because it perfectly explains what is the cookie. As you can see, I like cookies. And what is the difference between cross-sell and upsell? Yes, so here is actually the description of one of our proposals, which we call Web Data Insights. Web Data Insights is something which is directed to SME and sole traders and self-employed customers, but it can also work well on the private individuals. It depends. What we do here, we capture cookies, as you can see on the screen, and we try to interpret them by what customer is doing and how customer is doing and what customer is interested in to define the risk profile. This is a very, very good tool and good solution. And this is an example, nothing else, but example of new source of data for the pandemic times. If you remember, back in 2020, everybody was a bit surprised of the situation, what happened and how it happened, how rapid it happened. And when I was talking with my customers, especially the one handling SME businesses, they were a little bit, I would say, defenseless because it was the last quarter, it was the first quarter of 2020. They still haven't received the financial statements for the 2019, in fact. All the clients had opened the business lines, the credit lines, the limits, or the investment loans, and economy was locking up. This was the clients in different countries, so it was a little bit different depending on the country reaction on COVID. But what my clients were missing, it was a monitoring piece and here and now information. So they had a perfect system showing them through the cycle information based on the financial statements and companies' external ones, like, for instance, like Dun & Bradstreet, the economic review of the customer. But they missed up and now, here and now information. This is a kind of, I would say, setup of info that can give you this information. Our crawlers search for the information in Google and looking for a very up-to-date information, what is here and now, and help you to define profile. This is, of course, dummy example here. So it shows that if customer is looking for a theater spectacle, he is a lower risk profile than somebody who is looking for some hard adventure. But this is an example of the usage of modern technology and modern data. So since everybody moved into the internet and everybody moved into the web with all the life activities, people are leaving trace, they are leaving trail, and you can trace them, you can see what they were doing, which pages they were looking into, and so on. Of course, you need to handle the data privacy and GDPR. This is not the topic today, so I will gently skip it. However, I want just to assure you that we are aware of this risk and we are in full understanding. Of course, customer can block you. Customer can say, I don't want you to trace me. I don't want you to check my info. I don't want you to check my cookies. For me, this is a message of two types. One, customer is taking care of his or she's privacy and there is nothing wrong with it. But perhaps this customer has something to hide and it needs to be checked in the fraud department, especially if his or she's name is end on ski. Remember this rule, this is very important. Here, what you can see is the McDonald's. Well, I think it's McDonald's. It can be any other hamburger industry, but this is McDonald's. And this means that you can monitor the whole McDonald's corporation. You can monitor McDonald's in a given area. You can monitor the performance of McDonald's in a given district, or you may monitor one single-handed franchise that is owned, for instance, by Mr. Kowalski. And again, Mr. Kowalski ends on ski, and all the German bank will tell you need to monitor them very carefully. If you remember the movie The Founder with Michael Keaton, this guy was Czech, not Polish, but his name was almost like this. And if McDonald's brothers used this rule, they would probably still be owners of McDonald's, and I wouldn't eat this many sandwiches with upsell and cross-sell, and I wouldn't look like that today. But again, that's another story. Let's go to the next slide, please. Customer management has many dimensions. That's what I said. That's a typical golden structure of customer management. You use it for marketing, originations, for bidding, collections, for transactional, and you got numbers of outputs. And how to deal with it, how to build a proper strategy. You need to have understanding what is important and which data works for your population. Test and learn, test and learn. And you need to have the structure, the infrastructure to calculate it all. You will have, we can go to the next slide actually. You will have in the future a lot of new data dimensions. Here you can see the examples coming from our heads. Sectorial data after COVID, very important one. Web data I just described. The climate data, flooding data risk, the weather data, the energy, the coal, CO2 responsibleness of the companies. Very hot topic in my country actually. Environmental data, the carbon footprint, that's the right word. And all the different new data dimensions, the activity in network, the fraud risk, the anything that brings you here. You need to test and learn. You need to check the new dimensions, and you need to build your customer care process. Customer care process, customer service process, again, coming from your KPIs. You can maximize your focus on client. You can maximize your sale. You can look for the most convenient, most seamless process for your customers. So limit management, new products, simple, easy. You may check what your customers do. You may try to get in touch with them. You can build the models that will tell you which is the preferred channel, which is the preferred contact hours, how you should talk to your customers. For me, depends. Sometimes I want to talk by phone. Sometimes I want an email. I can give you a very nice example of the failure of Tier 1 bank in CEE. I'm merciful, so I will not tell you the name. They hired a consultant, very, very expensive one. And they built something which they called in the market behavioral segmentation. Okay, what is the behavioral segmentation? They said to everyone, okay, we took the transactional data. It was like 5 years ago, so long before open banking. They took transactional data and they built the segmentation based on spending. And they decided that this client is a high spender, this client is a social spender, this client is responsible spender, this client is a saver. It was a fantastic segmentation. They spent really a lot of money on it, probably too much because they missed some on a good data scientist, because the huge mistake they did, they relied on one variable, the spendings. It turned out that the stability of this population is zero. So one day I get my salary and next day I go to shop and I spend, and this day I'm spontaneous spender, but the next day I'm not spending at all, which means I'm a saving person. So the whole structure and the whole segmentation was complete mess and complete failure, and they had to withdraw from it after spending a lot of money. What they missed here, they missed the balance. They wanted to do something new, they wanted to do something modern, and they wanted to satisfy their clients. Clients completely didn't want that. Test and learn, have a good infrastructure, and how to do it will tell you my colleague Jenny. Jenny, over to you.
Bartek, thank you so much. Really enjoyed hearing your experiences. And I think there's not one of us who has not at some point in time had a negative experience from a bank or other service provider where our first thought has been, but you honestly could not have looked at my full profile in order to be able to understand me. And I think what also resonated very strongly for me with what you spoke about was the inability of most banks to deal with small businesses and corporates in a more agile manner, and be able to adapt their entire processes for SMEs, who are a very different kettle of fish, SMEs and sole proprietors. So thanks for that entertaining session. I'm focusing in on then how do you define that customer model? Now, when we're talking about a consumer, that tends to be fairly simplistic. We know that we have an individual, let's say customer one or customer two, that generally these customers have multiple accounts, whether it is within a telco, within a bank, or any other type of organization. And sometimes they need to be grouped together in some or other way. So if we overlay that with an example of a household where we've got the Mr. and Mrs. forming part of the household, each having some of their own accounts, but also potentially holding some joint accounts, such as something like a mortgage. The solution not only needs to be able to understand that structure, but to be able to apply any strategies based on the structure and understanding what it is at any point in time. So the consumer model, from what I've seen over more than 20 years, has not really changed. It tends to fit within this 2 to 3 level structure in all organizations that we deal with. The challenge comes when we start, and that's just an example there of even within a telco, how that might work. But the challenge then really comes when you move into your more complex organizations. So in particular, the complexities and the challenges that we see our clients face is when they're dealing with corporates, where you have got business groups, and those groups might own other groups, which then hold multiple entities. And each of these entities and groups have got other entities, groups, and accounts that's below them. And those might then also have a different activity that they perform within that entity in terms of being an account, or maybe a sole proprietor, being collateral that's held against some of the accounts. And we've seen over the years that the challenges that businesses face is how to simplify this when it comes to trying to automate it within their organizations. What we have seen really works is, at the end of the day, all of these individual objects that sit within this complex flow can again be broken down into this fairly simplistic 3-level model, where you have got a group level, you've got an entity level, and below that you have an account level. So yes, you need to, if you are then dealing with a very complex model, be able to tie together and from one group to another, how that then builds up into a very complex structure. But at the end of the day, within your systems, you should be able to break down everything into this 3-level structure. So within the solutions that you work, you should be able to define that group, customer or entity, account type level. If it is absolutely necessary, you should be able to add in any number of levels at different points within that solution. But our recommendation, based on our experience, is don't. Try and keep it to this kind of structure and be able to then just tie at a data level, tie them back between your different groups. What's also really helpful is if the solutions that you run give your business users the ability to be able to manage a lot of this independently of IT, so that at each level within the solution, your business users are able to manage the data elements that have arrived in the solution, calculate any number of variables that they need within it. And that should be at, again, a group level, a customer level, or an account level. So your business users should, based on what they know they want to monitor or utilize within the scorecards or within any of the strategy, be able to go and calculate any number of variables. Now, when it comes to working with behavioral solutions, you're not just working at a point in time. You're working over multiple time periods. So again, your solutions need to be storing the information, and you can then, within your calculations, create several time-since variables. So that, for instance, things like the turnover in the last 12 periods, or the worst delinquency in the last 3 periods, 6 periods, etc. So it's great if your business users are able to specify the number of periods that need to be retained in order for them to be able to calculate the variables that they have seen are predictive within your behavioral scoring models. Most of the time, we find that that sits within a 12 to 24 month period. Very seldom do we see that there's a necessity to store it longer than that. But just making your whole solution accessible to your business users definitely helps in being able to manage both the complexity and the agility that you need within a behavioral system. So I'm going to hand over to you, Jakob, to go through some of the Q&A. I think there might be some questions.
Absolutely. Thanks a lot, Jen. And a very interesting insight in terms of the different layers on the complexity of actually understanding what a customer level is. And there's some conscious decisions to be made in that space. Let's have a look at some of the questions that have popped up. Right. Here we go. Right. Good. First question for you, Jen. That is, can you provide us any real case examples of managing customers at various levels? And also maybe, because you have had some interesting experiences, where has it potentially been too complex? That would be interesting to hear.
The answer is yes. Ones that come to mind for me are 2 global banks, both I think operating out of Europe. One of them put a solution in place of 7 levels. Mm-hmm. Another went as far as 10 levels. So there was a lot of discussion around it. Was it necessary? They felt very strongly it was, in order to cope with those multiple entity levels, that they defined it with these 7 or 10 levels. The impacts of that were, first of all, there was a massive impact on how long it took to deliver, because to get agreement on what those 10 levels were, or 7 levels, and how they would move together and what data was required, took a lot longer. Then the second impact was the complexity of maintaining it over time. So you don't end up with, they didn't end up with the agility that they thought they would. And anything that they changed in the system required a lot more testing, because you had to make sure that all the way up the levels, there was no impact on the strategy. So we took learnings from that, and in one of our more recent engagements in Africa, we actually did an extensive consulting with the clients when they came to upgrading their customer management solution. So they'd always had a customer management solution running on one of our older pieces of software. They were upgrading to Park of Customer Management, and they wanted to ensure that they did it right. They were very open, fortunately, but we did have a lot of engagement. We got a lot of challenges, but eventually they did come to agree that it made sense to sit within the 3-tier structure. That was successfully implemented, and that client actually has gone now into, they are evolving their solution in terms of event management. I think one of you guys spoke earlier about the need to be able to have answers now, today. It's no longer, in customer management, you can no longer do things monthly or maybe quarterly or something. It has to also be able to manage immediate changes in data and up-to-date strategies. So they've now evolved their system to be event-based and cycle-based, as well as monthly basis. But a lot of why they've been able to do what they've done is because they took the advice of working in that 3-level infrastructure, and then they use their big data stores as well where necessary to link things up to the higher group and entity levels.
Interesting, and I think I'll use that message as a curveball also to include you, Bartek, because I recently joined a panel debate where one of the feedback from, and it was with entrepreneurs in Denmark, and I was standing there with banks, senior banks or big banks in Denmark, and the feedback from the entrepreneurs to the banks were that they're very good handing out umbrellas when the sun is shining, but when it starts to rain, they'll take the umbrella back. And that was entrepreneurs talking at this panel debate. And also with Bartek, your point with sole traders, I'm interested to hear, when we talk about using data, how do we manage this during very, very intense, stressful times that we had during COVID-19, where we saw operations at banks being challenged to operate effectively because they had to manage multiple things at the same time in a very short time span? Any experiences you can share from your part of the world in terms of managing this in a successful way?
Yes, unfortunately, I have much more examples of managing it in non-successful way. But here what happens in the whole CEE and Balkans, actually, most of the banks managed the stress situation through the regulations, which was wrong. Because they did it without understanding the complexity of their clients. In fact, because for the people who's watching, just before I joined the Experian, I was the head of risk in one of the biggest banks in Poland for some time. And I had a lot of colleagues there, and in fact, I was helping them a little bit to solve the situation. So what really happened in March 2020, a lot of sole traders, a lot of SME companies went very quickly for financing. They wanted to have the limits and the money to spend some money for to live through the pandemic times. And what they did, they used our solution. They used our web data insights just to monitor the current situation, but also they used the information from alternative sources like Dun & Bradstreet's reports and external scores, and they integrated the whole information. And in fact, what they did a very, very careful studies if this is legal in terms of GDPR, but basing on external companies' data. So basing on the financial statements of the market, because in Poland, this is legal to access the information of financial statements of the companies, even if they are not your clients. They applied the customer care score against the external data. And thanks to this, they were able to understand risk of the customers. So high risk, medium. Yes, it was not very sophisticated. I would say 3 levels. And the propensity to score, to buy, meaning they were able to identify clients that really need financing, and they are low risk even despite the pandemic times. And they were able to offer them kind of a bridge financing, nothing really deep or nothing really high. So they were not doing any investment loan this time, but they gave a bridge, the helpful hand to the clients that were in a real need, and they had a lot of chances to survive the pandemic times, and they were extremely successful in it. And thanks to this, they were really able to get a new clients, get a new sales, get a new volume, not by doing the KPIs, not by doing the volume sales, but giving a helpful hand to the clients and building a real trust and relationship. I'm speaking now about the values that are very difficult to measure, but it really happened, and customers were really grateful to them. Grateful versus banking, it doesn't sound very modern, and it doesn't sound like realistic today, but it really happened, and they were very helpful in that. Yes, I should mention that they also used our platform to do that, but that's another part of the story. That's the case I wanted to share.
Many thanks, Bartek, also for the last product placement remark. We really appreciate the feedback and the storytelling from your part of the world, Bartek. Very insightful. I think it was very relevant for the audience and for ourselves in Copenhagen to hear how your experience being a sole trader, working for Experian, and the pains and also suggestions as a way forward. I think those valuable life experiences is really something we can all benefit from. To summarize the session of today, we've discussed customer management. The key thing is make sure we make our customers happy. That is how we make the business run over time. And in order to do so, we need to use data. We need to use the right data, but we also need to have a key eye on the complexity and not create a spaceship, but have something that is maintainable and operational in the real life execution of strategies. I'd like to say thank you to you, Bartek, in Warsaw, Jennifer with me here in Copenhagen. I really appreciate your input today. And then I'd like also to do a little bit of commercial advertisement for the next sessions in our webinar series. Next week, we'll move to the next stage in the credit life cycle, where we will discuss collections management. Bartek will also be part of that one, help us navigate us through that space. And then the week after, we'll go a little bit deeper into the strategy management. We had the first part 2 weeks ago, and we'll go a little bit deeper in the test and learn environment and some real life examples from that. And then roadmap 20th of October, and then 27th October, we'll discuss AI and machine learning capabilities. Many thanks all for listening. I hope it was useful and look forward to see you next time. Thank you.
Thank you so much. Have a good day.